Hey, this is Jack from Alpha Charts with a state of the market video. Today is May 6th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you like these videos, please like and subscribe to my YouTube channel, and you can find me on Twitter at AlphaCharts365. All right. So a couple quick things too. Don't forget, earnings is upon us. So that's a big deal, right? We got through a really big earnings, but there's still a lot going on here. If you look, I mean, Disney's still out there, Roblox, PayPal, Palantir. There's a bunch of Under Armour, Dutch Brothers, Celsius. So a lot of earnings still to go. So just be aware of that. So let's get into the charts. All right, so on the SPY. So here's a SPY from, and I don't know why this anchored VWAP isn't there, but I like it right there. So what happened this week? So we had a really nasty week, and then Friday we had the bounce back, right? Actually, let's go to SPX. I think that's where my VWAP was. Yeah, that's where it's at. We use SPX. Sorry about that. There's the VWAP, and you see how the 50-day held. And now we're really just in this range, right? That's all this is. And, maybe, a lot of people would say, oh, that's a consolidation, but I see it a little bit differently. You know what? I mean, it's a broadening pattern. And if you learn, I mean, for me, broadening patterns are very dangerous because it just shows volatility, and the break, and if it's lower, could be pretty significant, right? So we know volatility is coming back into the market. And remember that big move on Friday, up 1.85, was on lower volume than the previous, 3 days. Not the best look, in my opinion, but we'll see what happens. But I don't love the way this is kind of looking like this. I think this is more of a problem than a solution to the bear market that we're in. All right. And by the way, on the week, 0.8 down. So you see how buyers, really stepped in, and you also see on the weekly chart how that volatility is really starting to pick up. The ranges are expanding. All right. Now RSP was down 1.45. So once again, what are we seeing here? We're seeing the breadth just deteriorate out of the market, right? At least that's the way I look at it. On the daily, you can see, RSP is right at the 200-day and underneath all of its moving averages, and looks much different than SPX, right? Not nearly as strong, and you see it did also move up nicely, but on lower volume. All right. And then when we look at the ratio, which is one of my favorite things to do recently, right? And so sometimes charts are pertinent and sometimes they're not, right? But I think right now this one is very pertinent and has been, and I've been highlighting this one now for a long time. If you're a regular watcher, and you see how we broke down from this, we'll call a bear flag in this ratio chart, and continue to make lows, right? And we're back to lows from April, right, 2022. And let's just go to weekly and maybe look at this, and it just shows you we could go much lower, right? That's what I guess I'm trying to show here. Here's 2020, and you see how this it stopped going lower, right? Stopped going lower, and then it started to rise. And I think that's what we're looking for. We're looking for the rise, right? Even here, that was a tell, right? So anyway, my point is we're still seeing a deterioration in this ratio, and that's a big deal. All right, let's get this back on and look at the Qs. Here are the Qs back to the top of the range, making multi-month highs, right? So that's all nice and dandy. Again, volume was more than the day before. That's a positive, right? And it held the VWAP from the COVID highs, or the all-time highs, really. And you see how it was resistance, and now it looks like it's trying to become support. And so I think the 316 level is a very, very relevant level. Here comes the 50-day coming up here at 309. And so, again, a move higher, and Qs could be, back in the driver's seat, leading the market, which is, I think, a positive, right? On the week, it was green compared to the SPX, which was red, right? Again, shows the difference between technology names and oil and gas and banking exposure, right? Just the way they're made up. Now, the equal weights, let's see what they were. They were down 0.28. So you see, again, underperformance on the equal weighted on the NASDAQ. And we still have this overhead supply area, $73 to $74. That's a big deal. And price still has not been able to conquer that area for, a very long time, right? We're going back a year. So that's a big deal. Big base. If it does break out, it's not quite there yet. Divergence definitely seen. And if we do the ratio chart, Bitfender, what are you doing to me? QQQE to QQQ. Without even cleaning it up, you can just see how it is continuing to deteriorate on the chart. Okay, so there's that. Let's look at IWM, and I'll just clean this up. Yeah, so this is on the daily first. Let's look at it. You saw that it popped right into its moving averages, but right now we have a flat 200-day. You have a declining 50-day and declining or flattish 9 and 23s. So some indecision here and some sideways motion, but with the longer term trend, the 50 declining, I think the bears still have the ball here, but we're right into potential support, right? So, this 161, 162 area, that's a big deal. A lot of indecision going on here, but, any move higher, right, may be a potential shorting opportunity, right? As just some supply showing up in this area up here. So we'll see. But IWM, again, the weakest of the bunch. And that's usually not what you see in bull markets, right? In bull markets, IWM is at least participating, if not, leading. And that really isn't what we have. And again, you can show the volume here is very low on Friday. And we'll just look at mid caps to round it out. And mid caps, again, underneath all of its moving averages, just very similar, much lower volume. I mean, so not a great look, in my opinion. And listen, can it resolve higher? Absolutely, right? And I would change my opinion. It gets above 454-ish, right? And things start to turn around. That's a different scenario. We're not, above 460, really. It gets above 460. I'll change my tune in a heartbeat, but it just does not look all that healthy right now. Okay. And just IWO, same thing, not looking great, in my opinion. All right, let's look at so on the index level, even though we had a good Friday, I think the prior week really is the real move in the market. It's got more work to do if the bulls are going to take the ball away from the bears. And I don't think we're there yet. XLF, right? Let's see what that did this week. So had a nice bounce back on Friday, lower volume, and again, underneath all of its moving averages. To me, the Friday move really was more of a counter trend rally because things got overdone to the downside. That's what it looks like. I mean, we can't ignore that it is a higher low compared to here, right? For now. So we'll see if that continues or not. But good chance that this may retest. I wouldn't be shocked if it retests the 30 to 31 area at least one more time, and then we'll see what happens. But that's a big area, as we all know. Semiconductors. XSD. Again, if things are going to do better, semiconductors would probably be leading, and we don't see them leading. They are underneath all their moving averages, and now they're all turning down. Basically, the 200 starting to flatten. not the best look. And here's the cap weighted semiconductors. Looks like there was a split on Friday. So pricing may change or whatever, but either way, it's again, it's having a hard time with these moving averages. And again, let's look at XSD versus SMH. And we're seeing again just deterioration in semiconductors, right? Not what I want to see. Transports, had this kind of rising wedge into moving averages, broke down, came back, and is now struggling right at the moving averages. And what does that tell us, right? When we see the struggle, we've seen this on a lot of charts so far. We're basically saying that the market is kind of confused in some ways, doesn't really know which way it wants to go. So it is just choppy mess, which makes it very, very hard to trade. Then XHB, came back, retested. Again, it's looking good above all its moving averages. The narrative of home builders is basically with rising rates, they're trying to finish all the construction and sell as much as they can now, which is the faster push and incentives out there is causing their revenues look good. But once this kind of wave is through, then there's not much behind it coming through. May or may not be true. I don't know. But the chart says it's holding up pretty good. Even though we haven't taken out this high yet, it's definitely doing better than some. So let's see. XLF ain't looking great. Semiconductors is not looking good. Transports are confused. Home builders look good. So overall, because of especially the semiconductors leading to the downside, leaves me to believe that this market is still in the suspect area, right? So the economy I'm talking about, people don't know which way, recession coming, recession not coming, who knows? In some ways, who cares? But in other ways, it could be a big deal, right? So very confused. That's what the economic indicators I use look like, right? But I would say leaning to the bearish side. Let's go VIX. And let's get rid of this, and let's get rid of that. All right. So VIX was very low, bounced, and now it's coming back down again. And so we could see moves like this over a period of time, which makes trading sometimes not the easiest, right? And so we'll see how far down. Maybe it takes out this low, maybe it doesn't. But you see how we kind of get that sometimes that double bottom look or whatever you want to call this choppiness. And there'll be money to be made on the shorter term both ways, but it's hard for trend trading in some respects, right? Unless you have a bigger gap, but not quite extreme, but still pretty low, the VIX. So some tension was relieved off of it. We'll see if that continues or not. Credit spreads, I expect that to have come in some too, which it did. Now this is a relevant lower high to here, right? But a higher high. So, I mean, they're not screaming higher. That's the positive. The positive is that you're still within this kind of consolidation range area. And until it breaks, I don't think we're going to have a resolution to know which way the market wants to go. I still think, based on prior history, that this moves higher. That's my opinion. That's my bias, right? That's my bias, but it hasn't done it yet. So we'll wait and see. And then let's look at put call ratio. It's just, again, the choppiness in the market, and that's what this is showing. And then the last one will be, and then percent of stocks above the 50-day moving average. And you see it actually improved quite a bit on Friday. Back to the top of this range. That's an improvement, right? So even though we saw the RSP really underperform relative to SPX, we're starting, this is, again, a positive. Now, I think a lot of names are right around their 50-day moving average, which is why you're starting to see this choppiness in this indicator. So we need like almost like a big breath thrust to create some space, and so you'll see a more trending type of move, right? Breath thrust looks more like this. This is more like, hey, we just keep kind of getting above it, then below it, then above it, below it, some names. So that's what you're saying. So I think we need one more push for breath to really improve or not improve. So there we go. And then DXY, just in this range, right? Again, a move in DXY would be I think will help with the next move in the market, up or down, right? So there we go. So what are we going to let's put it all together? In the end, I think we have some volatility about to come back into the market. Usually in this scenario, I tend to be, seeing a broadening pattern like this. I'm in the camp of it could. Don't be surprised if it breaks down versus breaks out. I'm open to both scenarios, but I'd be. I think that this leads to lower prices, maybe a retest of 3,800 or something of that nature, or maybe the 200-day moving average, 3,970 or so, before it breaks above 4,200. So that's my best guess. I think the charts support that, as we see still the RSP underperform the SPX, and we're seeing financials and semiconductors not perform as well, and the VIX being as low as it is, more volatility coming in makes sense to me. All right, so that's what I got for you. Hope you all are doing well. Stay safe out there. Trade safe. Tomorrow we have stocks to watch coming. That'll be at tomorrow morning, and hopefully I'll get you some potential ideas. All right, y'all take care. Bye-bye.